All right. Well, let's thank you for joining us this week. I'll probably start with Lloyd's last currency pair since you guys are on it, which is gold. So I kind of agree with him. The positioning for gold is pretty much bullish, and I think what is really interesting is probably from a fundamental perspective, why gold prices are actually coming off, have that big spike down. It's just probably of the volatility in the market due to the war. The positions are being deleveraged, which means they are trying to cover their borrowed positions in this precious metal. And a very clear picture of why I still think there's a lot of bias in gold is just because when it is a flight to safety kind of asset, right? When things are when there's a lot of indecision, when there's a lot of unknown in the market, gold is one of the assets where people would think there is, it's safe, right? So we already have let me get my pen out. So what I do like on the daily time frame from a fundamental perspective is we already have a structural shift towards the upside over here, right? So you have a high, we have a low, and when price is giving us, it kind of broke this kind of attempted push to the upside over here. So I think there is more potential to the upside. The question is when will it kind of break out, which then if you can go down to the 4-hour time frame like what Lloyd does, we want to see to make sure we get in at a proper price, because if we look at just the daily candles from 4800 to I think 4600, there is almost 200 points down here, which is a big range to play in terms of risk. So please be careful when you are trading gold, because it will tend to swing a lot in this current economic climate. Now, on the other hand of things, I'm actually looking at Swiss yen. Very similarly, because there's a war currently, so whatever fundamentals out there, it's kind of not so important what the fundamentals think. It's more important where the sentiment is going. So when we look at market sentiment, so let's just say if we take the just the data, fundamental data does state that the US dollar and the Swiss does have economic strength right now. The currency pairs that are a bit softer is the euro and the yen. But if you add a little bit of facts of the war, which means that currently the problem a lot of markets are facing now is the oil shock, the energy supply shock. So if you look at the energy supply shock, which means gold prices, right? And because the Straits of Hormuz is where almost, I think 30-40%, if I research correctly online, it's about 40% of oil supply floats through the oil of Hormuz. However, yeah, let me go to my oil prices over here. Okay, so over here we have oil really spiking up to almost 100, almost a nice perfect 120, went down to 76, let's call it 75. So we have a very big range where oil is currently sitting right now. Now, when will this war end? Nobody knows, right? Nobody knows exactly when will all war ends. But what is the impact of high oil prices? So the euro is a bit vulnerable. Now, Germany's industrial sector is already struggling. Adding on to the massive energy supply shock, crude oil is now past 110, 115. So the ECB is stuck in a policy trap. They may be forced to hike interest rates to fight imported inflation, even as the economy is currently entering a technical recession. Technical recession means they have reducing GDP for the past 2 quarters, right? Now, Japan is another economy that is also in a little bit of energy trouble. Japan imports nearly all of its energy, and the closure of the Straits of Hormuz is a direct hit to Japan's trade balance, because Japan is actually is importing very expensive oil right now, and they've got no choice. They need the oil, they have to pay for it, and this is where it's going to face a little bit of oil shocks as well. So if we are looking at what currencies will suffer in the oil shock, both euro and Japanese yen is going to suffer from it, which I like Lloyd's technical analysis on a weakened euro, right? Which means the euro is currently in a soft play right now, adding on to this fundamental oil shock as well. So what currency pairs I'm looking at is really flight to safety pairs, which is USD. But if you guys have been following me for a while, you know that I'm a little bit more scaredy cat, right? So I don't really like to hold long USD positions. So I would rather trade the dollar positions. And this brings me really to the dollar yen, right? Dollar yen flight to safety, and the yen is the weaker one. So this is the correlation between the dollar yen and the US dollar 10-year government bonds. Now, this will be interesting because hypothetically, traditionally actually rather, there is a correlation between USD yen and the US 10-year treasury yields. This is one of the strongest correlations over historical the last 20, 30 years. And of course, there was a period of time where it kind of diverged for a bit. Now, the primary driver of the USD JPY is the yield spread. Yield spread means the difference between the US 10-year yields and the difference between the Japanese yields as well, because of the carry trade. So what is happening over here, if you look at it, usually the US 10-year bonds leads the movement of the US dollar JPY. So while I do like the idea of a strong USD, I also want to make sure I'm buying it at a proper price, right? So you see the US dollar yen over here has hit 160. 160 is an area where the Japanese government will worry a little bit, which means that there is going to be a decent probability where the Bank of Japan will intervene, because USD yen above 160, it's already an uncomfortable place for the Bank of Japan. The question is when will they start to intervene? Or have they already started intervening? We're not too sure. You know, usually what they'll do is they come out a little bit of news first, and then they'll do the actual intervention, which you will see, for example, an attempt over here, a little spike over here. All right, this spike was due to the news. So what the Japanese government like to do, they like to release news. They like to release news to kind of, or what I call sentiment, push the traders into moving to a certain direction, but the actual intervention will probably only happen slightly later. All right, so they don't want to waste their bullets in that sense. So what is interesting over here, it is price is over here, which means I'm expecting the Bank of Japan to release some kind of news next week. Alternatively, if they are just going to, in the middle of the night, do an intervention, then you will see a push down. This is where I want to buy. Wait for that intervention to happen, wait for that sentiment move to happen so that we can get dollar yen at a cheaper price. So this is what I'm waiting for. We already have a little bit of indication. The 10-year yield has already gone down. If the 10-year yields continue to go down lower, maybe about 4.2, I don't know if it'll ever reach 4.0, but this is what I'm eyeing at. If we can see the US dollar yield starts to push in, then I think this will also follow a move downwards. Then only, let's be a bit patient. We want to pick it up when it's a bit cheaper. Now, what is the range that I'm looking for the dollar yen? Now, dollar yen, I repeat, I don't like to buy and hold. I rather trade it, which means when price reaches your alert, hit your alerts and buy. We have a 152, which is a very, very far price at the moment. I think a more mid-range psychological level would be a 155, probably somewhere around here. This will be probably a more patient psychological range. If you guys are a bit more aggressive and if there's no actual intervention, it's just news, I think this 156 position, where is the previous tolerance level, might be a good place to potentially wait for buys. But again, use the technicals to find that that entry. Use that 4-hour, 1-hour chart to actually find that structure shift or that price entry to actually enter. Don't just wait for price to hit here, then you buy too early, you end up being in the wrong position for a longer period of time. So the two targets I'm looking for the dollar yen is a psychological 155, 152 and below is preferred. So it's not 152 exactly. Price might give us a break below, right? But 152, it's it's a slightly more comfortable level. I would say 150, I don't think it's going to go there in the short term. I think it's high chance that price is going to kind of stay in this range for quite a bit until the Japanese government kind of sorts out what it actually wants to do. All right, so this is what I'm looking at. I'm looking at news from the Bank of Japan coming out next week. Where can you find the news? Your Forex Factory calendar is somewhere where you can definitely look for the news. All right, so what's interesting next week over here? Next week, we are going into the week of April. Please note that Monday is a public holiday. What is interesting over here? Okay, you have a little bit of yellow stuff over here. Just not too important. I think what I would want to see is over here. Let me just clear out the list. Let me just adjust the filter. Sorry, this one is too much rubbish over here. Okay, over here. Now, what I'm actually interested in next week is really what is the. Actually, I think it's the week after next. There is a Japanese news coming up in the next few weeks. Okay, I think over here. Over here, we have Tokyo CPI. This is about third week of April. Third week of April, Tokyo CPI starts to come out. This would be one of the indicators that will give a hint to how Japan's economy is doing and whether or not the Bank of Japan will finally be a little bit more aggressive with its interest rates. However, in the middle of the week, you never know. Okay, there will be a pop-up of a speech somewhere. When something unique pops out in the middle of the week, we have to look at it because it means that the Japanese government has to make a decision due to a bit of urgency. So one way to do it is we don't see any Japanese news here, but if suddenly along the week we have a ad hoc Bank of Japan head speech. A speech comes out. This is the title we want to read because we want to know, has the Japanese government decided to do anything yet? Which I think their next rate hike is projected towards the May area. I don't think April they have any projected rate hike at this point. So Bank of Japan is really more of a wait and see. I do want to wait for prices to come off first. Let's see whether the sentiment pushes it down before we buy in. But dollar yen and of course the Swiss yen over here is definitely two of my currency pairs that I'm looking at. Swiss yen, was looking at this last week. What I do like about it, it already has hit, one of our psychological levels at 198. I might have missed this. If you have missed this move on the shorter time frames, do note, please wait for another retest because on a daily time frame, price still looks a bit more bearish. All right, so this is one of the level. If this level holds on the Swiss yen, all right, if this level holds, then this is a good place to do some conservative buys. But if price breaks through here, my next place of purchase will be 195. All right, so these are the two main currency pairs I'm looking at for the next maybe 1 month, and be a bit patient. Markets are in flux. If you want to make quick bucks, technicals is still where it's at, I feel. Just find the entries, go in, get out. I think technical traders will be in very good hands right now. The fundamentals is very blurred. Sentiment is where it's at. What do you think, Lloyd?
I think now, if you all really don't know what's going on, stay out of the market. At least for I would say the next 2 weeks will be a wise choice. But otherwise, technical will be a good thing to follow at the moment. But even then, what I would like to add on is that if you hear a bit of a good news, then you look at the technical to see if it confirms it. Yeah, I would say now is the time whereby I wouldn't necessarily say that technical is really good or fundamental is good, but it's a good time whereby if both confirm, then yeah, it's there. Otherwise, it's just another one of Donald Trump's tweets. Before we end off the session, I just want to share something with you. I don't know whether you all realize it. I think most of you are in Singapore. Is that Singapore is actually considered a safe haven currency, in a way more than America in certain regards. I'm going to share something with you all. Is that I I don't trade USD SGD as much as Alexis, but I would say when I do trade it, it usually I hold for quite long. Which I actually put it out there is that I trade reversal in USD SGD. I'll show you all something. Is that because I realized that over the years of trading USD SGD, especially when US rised, it tends to follow one pattern. Yeah, I trade 4 hours, so I'll show you the daily chart, and y'all can be extremely patient about it. There's no rush to get it. What happens is that when there's a reversal, that means let's say the war is over, from flight to safe haven USD has done its job. Money usually comes to Singapore. A lot of money actually does comes to Singapore. Yeah. So what happens is that you can see faintly a double top starts to happen, and then a retest. And this you can actually scroll back your chart and look. It actually happens quite a fair bit amount of time. So you can actually wait for this retest. But this double top odds to give. Technically, this double top gives you a signal that hey, the flight to safe haven has done its job already, has run off its steam. Yeah, wait for the retest. Usually the movement down, if you're willing to hold for a long while, the rewards are quite good. So you can see that it happens once, happens twice. So of course we must see that there's a significant run up, not just any small run up, a significant run up, which usually means that it lasts for at least 2 months minimally. Yeah, the retest is actually quite nice to trade. You can see that here it is. A retest will be quite nice to trade. You can see the rundown is usually quite nice. And you can see a double top and retest. The rundown is actually quite nice. If the run up is 2 months, and if you're willing, you can hold a rundown, will also be about 2 to 3 months. Yeah. So this is something that I am patiently waiting for when it happens. Yeah, this is one of those times whereby the dinosaur management comes in, whereby you can buy and really, well, you can sell and really hold for a long time if you do have the patience for it. Yep. So that's the final thing for me.
I really like that. And to add on, I think that's how Lloyd and myself is so different here. But what I'm learning from him is when it's time for Lloyd to make money in dollars, Sing, it's time for me to exit my positions. Okay, so I love that because I've always been a fan of holding dollar sing, but really mainly to earn the swaps, right? So you can see I've got a dollar sing position over here since the February. So my challenge would be, okay, when do I pack my bag and get out of this market? I guess it really is when that double top happens, on the dollar sing. It tells me that market is reversing. That's when lot is going to start make money, and this is I probably have to exit. All right. So over here on the dollar sing, I do have buy zones, which means I actually do this the opposite side from Lloyd, and what would really probably be interesting for me is now to experiment, can I actually do it both ways as well? So um, I do like to buy dollar sings at these areas and just hold it for weeks and months, earn the swaps, and just get in and out of positive positions because I'm a conservative trader. But now looking at how Lloyd presents, I think it's really cool because what I'm looking at also is then can I hold my trade a bit longer till that double top happens? So it looks like, if there's no double top here, I was actually thinking, should I close the position? I'm just going to wait some more, right? So I think understanding where your own bias is, understanding your own personality is, it's a good way to kind of figure out then how do you want to get in of our positions. And maybe for myself, it's definitely how can I enhance my dollar sing a little bit more profitably. And instead of getting a little bit too early, which I tend to do sometimes, now I can look for that reversal signal. So I think that's a really, really interesting thing. I really just was trying to figure out when should I take my profits from this currency pair. So Lloyd has given me an answer this week, which is great. Thank you, Lloyd. I will hold on a little while more until I see that reversal.
I will claim a beer from you in Bali then.
You can have a beer and a pizza.
All right, thank you guys for joining us this week. I hope you're able to bang in some money. Otherwise,